Hi guys, this is Matches Trading Professionals and handling the session is Miracle Okafo, but my friends call me Mini FS. We'll be going into a more advanced courses, the advanced aspects of forex trading. So far, we've done lots of basic courses, and I believe we have an understanding now of the fundamental things, the primary things in forex trading. Okay, right now, in this video, we'll be talking about the moving average. Of course, this is our first professional course, so it has to be taken seriously. So I want to do this. It's something we call types of analysis. So I want to write that down because the moving average I called falls into a kind of analysis, like into a category out of all the types of analysis that we have. So we have different ways we analyze the market, we get our information, whether to buy or to sell. Okay, something has to inform you if you should buy or you should sell. So the first is the technical analysis. The second is the fundamental analysis, and then we have the sentimental analysis and the breaking news. Okay, most times you just see three types of analysis. Okay, you might not see this breaking news. Or breaking news are unplanned news. They are not in the calendar. They just happen suddenly. Just like we have a natural disaster. Uh, we have a resignation of a key person, probably the chairman of the board of a company. It could actually influence investors' sentiments to invest or not to invest and all that. So breaking news is actually an unplanned event. Why the fundamentals it also has to do with their news. Okay, but they are planned. There's a calendar for it, like the release of economic data like GDP, interest rates, CPI, PPI, and the likes of others. They are under fundamental analysis. Okay, then the technical analysis has to do with the use of price action indicators, the use of the chart and the patterns on them to analyze the forex market. So anytime we're using the chart, we're using indicators, what we are doing is technical analysis. Okay, so firstly, we are starting up our professional class with technical analysis and basically indicators. So technical analysis can be divided into two: price action. Actually, I think about three, but I can remember two right now: price action and indicator. So we are treating indicator first, specifically the moving average. Okay, talking about sentimental analysis. Sentimental analysis has to do with how investors feel about an asset. What is the feeling of the market? What is the psychology of the market? How do people feel? The fundamental could be good, but people don't feel like putting their money there. Then definitely people are not putting their money. If there's no demand, we can't have price appreciate. Okay, then the fundamental could be bad. It could be a risky investment, but people have this confidence in investing in it. So despite the fundamental is bad, despite the news is bad, but people still want to invest there. Then of course, if people are investing, the price of the asset will still appreciate. So the issue is what is influencing demand, what is influencing supply. Okay, have this at the back of your mind. Whenever we have increase in demand, we have increase in price, and when we have increase in supply, we have decrease in price. Okay, demand and supply oftentimes go the opposite directions. So I haven't said that straight to the moving average. What is moving average? Moving average is the average of price over a period of time. Let me still write on the chart. Moving average is the average, moving average. So what is average? Average is the mean of price over a period. Okay, average is the mean of price. The mean of price. You get the sum total of the numbers and you divide it by the number they are. Okay, that's average. So moving average, because the market will keep updating itself, will keep having values. So let's say this is a chart and the market is going this way. So the moving average will keep following price. So at this point, the market is here at point X. The moving average will be somewhere here also at point Y. So this moving average could have been following price this way. So the moving average is the average of price over a period of time. So there's a word there, period. We have 4 types of moving average. We have the simple moving average, exponential moving average, the smoothed moving average, and the weighted moving average, if I'm not mistaken. These are the 4 types of moving average that we have. Most often, you could read books on moving average. You see SMA, you see EMA. They are talking about simple moving average and exponential moving average. And most of the times, traders use either of the both of them. Personally, I use more of the exponential moving average. Okay, so that's for the types of moving average. Then for the period, we have different period. So period has to do with the number of candlesticks, with the number of bars that will be considered. If you put in 10, it's going to consider 10 candles. If you put in 200, it's going to consider 200 candles. If you put in 50, it's going to consider 50 candles, you know. So in that time frame that you are, so okay, there's something called time frame in Forex. So the time frame, the moving average, for instance, in the daily time frame, D1 will be different, could be different from the moving average in the M15, which is the 15 minutes chart. Okay, so as time goes on, we'll be able to discuss all that. So I have a very simple rule when it comes to the moving average, and I advise people to stick to it because over time I've worked with the moving average for the past 3 years, and I've learned a lot with the moving average. Moving average is one of the best indicators in the forex market. I say one of the best. I didn't really say it's the best, but to me, it's the best for me actually. Okay, I've used lots of indicators, a lot of them. The moving average actually stands out. Okay, so one, it's a moving average works on the price directly, like on the chart. So it does what the chart does. So what are the advantages of the moving average? One of the biggest advantages are smoothing out price. Okay, smoothing out price. Okay. So what do we mean by this? If you come, you know, the market is chaotic, the market is full of noise. We have different waves like this, like this, like this. These are the market moves actually. So, but when you find the moving average, you are not going to have all this, you know, have, depending on the period you are using. Okay, for instance, there's a period of moving average you use. It could go like this. It could go like this. Now, if you even look at it, it has smoothed out the price a bit. It doesn't have the swing the way it is, like the big moves the way it is. Then there's another moving average you can apply on the chart. You could have it go like this. Okay. So the higher the period, the slower. So I'm going to call it slow. The slower the moving average is going to be, and the smoother is going to be. Then you can have a moving average like this one. So no matter how this price keeps going in swings, you know, doing like this, the red one will respond more to price. The red one will respond more to price. Okay, the red one would respond more to price than the blue one. So you could have the blue one do something like this. Yeah, like this. So this is what we're going to have. So the red one here can be, for instance, the red one here can be 10, let's say 20. The blue one can be 80, for instance, and that green one can be 400. Okay, you can see the higher it is, the slower it is. This green one is really far from price. You can imagine when the market is at this point X, let me type X, at this point X, on the moving average Y, you can see where the moving average was. Okay, we'll go to the chart, but I just need to establish this. So in this case, 20 is faster than 80, and 80 is faster than 400. So if there was no 80, if it was just two moving averages we have, that means this blue one was not there. The red one will be called the fast moving average. The green one will be called the slow moving average. Okay, so the faster it is, the closer it is to the price, fast MA. So we'll call it MA, and then this one will be called the slow MA. So take note of these terms, fast MA, slow MA. So I said one of the advantages of the moving average is that it smooths out price. Also, it is used for direction and entry. Another advantage of the moving average, it is used to get market directions and entry. To determine market directions and entry. Okay, so I've said that. I need to type that again. No. So another function of the moving average is that it gives us our entries and exits. Okay, so for market direction, okay, for entry and exit. I haven't said that. Let's go to the chart and show us a moving average. So let's do that quickly. So this is the market, this is the chart, this New Zealand dollar, USD. So you go to insert menu, you click on indicator, you click on trend. Moving average is a trend indicator. So you can see moving average. We have other trend indicators. So moving average. Okay, I didn't define indicator. Indicator is this indicator is used for technical analysis, of which it is a pre-coded instruction or that is of course applied on the chart, either the opening price or the closing price or high or low. Look at like this place we have applied to. So that's applied on the chart or the volume, which aids analysis. So it's a mathematical tool. Indicator is a mathematical tool applied on the chart. So talking about applied on the chart means either close, open, high or low, or this is so applied on the chart or volume in order to analyze the Forex market. Okay, so basically I use the closing price. I use the closing price. Is the closing price level. I'm not touching visualization. It's visualized like it shows on all time frame. So parameter, this 50 moving average. Let's go with 50. 50 is one of the most simple moving average. And so I use 50, I use lesser period. So talking about the 50 moving average, that's it. So period, you type it, the period you want. Then here, moving average method, I told us about 4 types of moving average. You can see linear weighted. I think I only mentioned weighted, so linear weighted. Okay, so exponential moving average. Okay, you can see how it's following the market. Let me still do something. If you look here, there's a tool here. You can still use this tool to bring in the moving average. So if you click on, so if you click on this tool, you can see moving average. You can still see trend here. So that's one of the ways. This is the second way of loading your indicator. Click here, click on this tool, click on trend, click on moving average. But because we've loaded it already, that's why it's here. So moving average, you select the period, okay, and go on every set. Let me make this 200. Let me make this 500. Let me make this 500, and let me make it a white color. Now let me increase the thickness. Let me increase, so you can increase the thickness. Then if what you want is a dotted line, you can do that. So, but let me increase the thickness. So we have this. So I click on OK. You see how far it is. So in this case now, this red one is our fast moving average, and the white one is our slow moving average. You see it. Okay. So right here. Okay. Let me remove this. I'll come back to that. Delete. So we can modify. If I point on it, 50, I can double click on it. to modify. So I can modify this to 200. I can change the thickness. Is anything here? Okay, sticker. I point on it to show. Once it shows the name, I point on it. It shows the name. Then I double click on it. I can return it. Okay, so let's try this 200 moving average. Okay, so because I'm going to leave us with an assignment in the of this class. What do we do when you come to the chart? Let's do this on H4 time frame. Let's do this on H4 time frame. Whenever you come to the chart and you notice that price, okay, this assignment it's for everybody, you know. If you're a newbie, mostly just do this. This is just the first thing that I want you to do. Okay, this is not the way you trade. We have the best way you're going to trade with this concept, but for now, just do this for us. Okay, thank you. Now, what you're going to do, like this place now, like from here, that price was below the red line, which is the moving average. All you are going to do for me is to sell. Don't even buy, sell. Okay, like today, looking at the current market, where look at price 0.69341. Price is above. If you want to do anything here, just buy for me. Forget the price action, forget anything, just buy. Just click on buy. Just click on buy. I've tried out this method over years. It has worked. You know, let's just use this 200 moving average for just buy. Don't do anything again, just buy. Okay, so as it is now, just go to new order, select your lot size, click on buy, instant execution, just leave it. So if you have a demo account, actually, okay, not on a live account, prices is on the demo account, then let's see what's going to happen in the next 2 weeks, between now and the next 2 weeks. So place as much positions as possible using the concept of the moving average. So what is the rule? Let me just give you the write down the simple rule. It's very simple. Okay, it's very simple. Okay, so when price is above any period you are using, so above the moving average, buy. When price is below the moving average, so guys, I often tell people that we have the easy part of Forex, we have the difficult part of Forex. When you do the difficult one, you will make money. When you do the simple one, you will make money. So choose what you want. This concept I just gave you is very simple. And trust me, I must tell you the truth. You can make money with it. You can make money with it. It's not just this, what I just talked now, like what I just discussed now that you do alone, you know, but just do this first. Let's start from somewhere. Okay, as we progress, I'll give us easy links, easy easy concepts that you're going to put in place. You're going to apply, and you would often see your trades blue. That's what we've been doing for years now, and it's been working. It's been working. All right, I really appreciate you for watching this video. If you got value, please subscribe to our channel and follow us check out our website on mtradingpro.com. See what we have, what we offer. We have lots of trading robots, and they are working very well. They are consistent with the current market, even with the old market, like the history. They are over 80% accurate. Okay, so if you want an automated system, you can still reach out to us and get that as well. If you want personal mentorship, trading, you can still reach out to us. We are just here to serve you, and all I can assure you is the best. We would always give you the best. It's EA, if it's customized indicators, whatever you want, we are going to give it to you. Okay, remember, this is a community, and what we want to do here is to benefit from each other, share ideas, trading ideas, and grow together. Okay, so you can join our Telegram channels. We drop free signals there. Of course, we do weekly reviews of the market every weekend. So just there are lots to benefit. Okay, there are lots to benefit. So just be part of our team. Thank you very much, and enjoy the rest of the day.